Perspective now with Roben Farzad. He's a business journalist and the host of NPR's Full Disclosure. Roben, great to see you. What does this mean for the average American consumer?
You might see some incremental relief on your personal finances, credit cards, and the others, but it's really cold comfort, especially as Wall Street deliberates this, is saying, does the Fed still have its independence, in that Jerome Powell is already a lame duck? He's probably leaving the situation with his last rate cut at a quarter point. And what does the future foretell? The Fed can only look into its crystal ball so much, try to divine what unemployment is going to be next year. And right now, it's almost like Wall Street, the investing community, the bond community, is like this other branch of government, a check on Donald Trump riding roughshod over the Fed's independence and saying, I just want a person cutting more than this. It should not be dictated by the White House. And let's see how the markets react. If they sense that the White House is now controlling monetary policy by proxy, and that bodes well for the next Fed chair, then that is not good for markets. And who knows if anybody's going to get the leeway to cut as much as Donald Trump wants.
And Roben, a survey from the National Federation of Independent Business finds small businesses ramped up price hikes in November at a historic pace. Does that raise questions for you about the wisdom of a cut, or are other factors at play?
I think about that, Brianna, and I think about where asset markets and real estate are right now. You typically would not see an urgency for rate cuts. What does kind of beg that is the general mood out there, consumer sentiment, this kind of shadow joblessness that maybe the headline unemployment rate doesn't reflect. And I wonder if it's a cost of capital thing. If you're thinking about borrowing, are you as a small business or a corporation saying, gee, if only rates were lower, I would go out and hire a ton of people? I'm not sure it's about that. Maybe if rates are lower, they're going to go back and buy stock or consider other things or save cash or invest the money. The big multi-trillion-dollar question right now is, how do we create and sustain jobs in this environment where it's threatened by AI, where it's threatened by automation, where China is dumping its wares on the United States? And that's not necessarily a bottleneck about interest rates. There are kind of broader existential issues at play.
Roben, I don't obviously have the full slate of votes in front of me the way that Matt Egan does, but I wonder what you made of some of the dissenting opinions that we heard about. You have Stephen Myron wanting a bigger cut, and you had at least two members not wanting any cut.
That's troublesome. I mean, that's pretty binary, isn't it? I mean, maybe you're looking at a proxy of the White House or somebody out there. You typically, as Matt said in the past, you would see some unanimity around it. Either we are slowing down or we are too hot. The Fed, in Powell's defense, is saying that, look, we've been at a restrictive interest rate policy. Merely by taking it down a smidge, we're approaching neutral. I know that gets in the jargon, but what kind of, resets it at the zero level is the big question right now. But the fact that there were two governors out there, two presidents, saying that we should not have hiked at all, I think reflects still a concern about inflation. We haven't killed inflation, and maybe there still has to be more pain and bloodletting, the likes of which Donald Trump and this dissident Fed member don't want to see.
Oh, bloodletting. My goodness. The president he's got this big choice, and we're watching it, right? Who he's going to replace Powell with. And this could happen before the end of his term. You have National Economic Council Director Kevin Hassett, who's thought to be the front runner. Trump's also the meeting today with former Fed Governor Kevin Warsh. What do you think about these choices? What could this mean?
You're hoping that he would step back and, like in his first term, bring in someone like Powell, who after Janet Yellen was kind of a kind of person you could get behind. Recall Alan Greenspan. Recall, who was there after Greenspan's replacement, and Bernanke and Yellen, who came in. There's generally been unanimity. This has been able to levitate above politics. But Trump, as with many other things, he's gone there. He specifically says, show me the extent of your loyalty. How much are you going to cut rates? That is something that is pretty taboo in the 100+ year of the modern relationship of the White House and the Federal Reserve. But he's wanting to go that way, and my perception is Wall Street and the gigantic multi-trillion-dollar capital markets community don't want it to go that way.
Roben, it is always great to have you on a big day like this. We appreciate the conversation.
Likewise.
Still to come,